Hello, good morning, good afternoon, good evening again. Welcome to another session on auditing and assurance. So, what are we learning today? So, today is a very interesting topic. Interesting for two things. One, it is something which we can surely expect in the examination. And second, this will be the last attempt where this will be asked in the examination. From the next attempt, it will not be asked. Now you will be like confused. Sir, what is the topic that you're talking about? Last time to be asked in the exam, next time it will not be asked. CARO 2016. So CARO 2016, as you know, November exam will be the last attempt where CARO 2016 will be asked. From the next attempt, you will have CARO 2020. So that is why this examination, they could be asking you questions on this. Yes, there are not great difference between 2016 and 2020, just that in 2016 we had 16 clauses and 2020, I don't know, according to the year, I think they are determining it, we have 20 clauses. So there are additions that has come, but a few numbering changes. We will be using a by-hearting technique, which will be a technique that will stay in your mind for maybe a few months. But I hope that this examination you clear so that you will not be able to wanting to learn 2020 CARO. Okay, but anyways, let's look at the topic. Most probably the question is expected in the exam, so you will have to focus, understand how it is being taught. Don't apply much of your mind, don't think too much, don't go too much into concepts, you are wasting your time. Okay, it is just to learn what is there in CARO and apply it in your answers. Okay, so let's start with the discussion of CARO 2016. The discussion is divided into two parts. First, we have to learn about the applicability of CARO. That means for who all is CARO, which companies is CARO applicable. Second part, we have to learn about the clauses in CARO, the various reporting aspects in CARO. Now, why is CARO reporting important? Because as per section 143 subsection 11 of the Companies Act 2013, there are some additional reporting requirements that the government can give to the central government can give to the auditors, and one of such reporting requirements is under CARO. So because of CARO, does the audit report that we have already issued assume lesser importance? Please understand there is no comparison between the audit report and CARO report. Those are two separate reports. So what you do in your audit report, your unmodified opinion, your key audit matter paragraph, your emphasis of matter paragraph, other matter paragraph will remain the same. Here what you have to understand is basically it's a separate report, it's an additional reporting requirement where few items are being selected on which reporting has to be done. So there are 16 items on which auditor will have to report. That 16 items is what we have to learn. Under that 16 items, what all needs to be reported is what we have to understand. Clear? Okay, so let's start. We'll start with the discussion on the applicability of CARO. Now, applicability of CARO, as you can see here, CARO 2016 is an additional reporting requirement. The order applies to every company, including foreign company. So this order, this company auditors report order applies to every company, including foreign company. But there are certain companies which are exempted from the order passed by the central government. Which are those companies which are exempted? One is the banking company is exempted, insurance company is exempted, then company license to operate under section 8 of the Companies Act is exempted, 1% company is exempted, small company is exempted. Learn this first. The banking company, come on. The insurance company, section 8 company, 1% company, small company. These are exempted. Okay, which are the classes of companies which are exempted? The banking company. Tell me, for a banking company, what is the additional reporting requirement as per RBI that is applicable? It is LFAR, long form audit report requirements. Do you understand? For insurance company also we had seen there are certain other reporting requirements. That is why CARO is not applicable. Section 8 companies not required because of the reasons, the objective of the company. Then 1% company and small company being companies which where large number of money is not involved. So these companies, class of companies are what? Exempted. Clear? Fine. Now, private company is also exempted from CARO, but there are some conditions which needs to be satisfied by the private company so that CARO becomes exempt for it. What are the conditions the private company needs to satisfy? One, the private company should not be a subsidiary or holding company of a public company. The first condition that you need to understand is the private company CARO will be exempt provided it should not be a subsidiary or holding of which company? Of a public company. It should not be a subsidiary or holding of a public company. Are you able to understand? It should not be a subsidiary or holding of a public company. So that is the first condition. The private company, that means if it is a private company, which is a subsidiary company of a public company, is CARO applicable? Tell me. If it is a private company which is subsidiary of a public company, is CARO applicable? A private company which is a subsidiary of a public company, is CARO applicable? What are you looking at me? Give me the answer. Is it applicable? Answer is yes, it is applicable. If it is a private company which is a subsidiary company of a public company, then CARO is applicable. CARO will not be applicable if the private company is not a subsidiary, not a holding company of a public company. Now, is that it? No, there are more conditions. Now, if it is a private company which is not a subsidiary, not a holding company of a public company, then there are three conditions which the private company will have to satisfy. What are the three conditions? Condition number one, their paid up share capital and reserves and surplus should not be more than 1 crore on the date of balance sheet. Their paid up share capital plus reserves and surplus on the date of balance sheet should not exceed rupees 1 crore, which means it should be less than or equal to 1 crore. Next. Now, second condition, the joining word is and or. Which is the joining word between first and second condition? The word is and. Now, if the word is and, which means the conditions are cumulative conditions. First condition and second condition and third condition needs to be satisfied so that CARO will not be applicable to a private company which is not a subsidiary or holding of a public company. So what is the first condition? Paid up share capital, reserves and surplus not more than 1 crore as on the date of balance sheet. Second, total borrowings not exceeding rupees 1 crore from any bank or financial institution at any point of time during the financial year. And total revenue as disclosed in schedule 3 not exceeding rupees 10 crore during the financial year as per the financial statements. Fine. So let us look at those three conditions. What are the three conditions which it talks about? Three conditions talks about. One, it says paid up share capital plus reserves and surplus as on the date of balance sheet should not exceed 1 crore. That means less than, it should be, it should be less than or equal to 1 crore. And next, total borrowings from banks and financial institution at any point of time during financial year should not exceed rupees 1 crore. And total revenue including revenue from discontinuing operations as per schedule 3 in the financial statement should not exceed rupees 10 crores. All these three conditions, if it is satisfied by which company? Private company which is not a subsidiary or holding of a public company, then CARO is applicable or not applicable? If all these three conditions are satisfied, CARO is applicable or not applicable? It is, come on, it is not applicable to this private company. Do you understand? These conditions are for not applicability. It is conditions for non-applicability of CARO to a private company which is not a subsidiary or holding of a public company. Hello, tell me, CARO is applicable to which companies? All companies. Yes, all companies, including which company? Foreign company. Including which company? Foreign company. Now, there are certain classes of companies which are exempt. Which are the class of companies which are exempt from CARO? Come on, repeat from there. I know you're just you're just listening to the recording, but I want you to repeat in your mind or wherever it is. Come on. One, it is banking company is exempt, insurance company is exempt, then section 8 company is exempt, 1% company exempt, small company is exempt, private company is exempt. If the private company is not a subsidiary or holding of a public company, then subject to how many conditions? 3 conditions. Their paid up share capital, reserves and surplus as on the date of balance sheet should not exceed rupees 1 crore. And total borrowings from banks or financial institution at any point of time during financial year should not exceed rupees 1 crore. And total revenue as per schedule 3 should not exceed in the financial statement, should not exceed rupees 10 crores. Okay? Okay? Fine. Now, tell me the answers one by one. Is CARO applicable to a public company? Yes. Is CARO applicable to a listed company? Yes. Is CARO applicable to an unlisted public company? Yes. Is CARO applicable to a government company? Government. Yes. Is CARO applicable to an insurance company? Yes. Is CARO applicable to a banking company? Hello, insurance companies, yes? Don't go in the flow. Insurance company is CARO applicable? No. Banking company? No. Section 8 company? No. Do you understand? Is CARO applicable to a private company which is a holding company of a public company? Is CARO applicable to a private company which is a holding company of a public company? Yes, CARO is applicable. Okay. Now, just let me ask you a few questions. Listen to me carefully. Imagine there is a private company which is not a subsidiary or holding of a public company. Okay. Now, paid up share capital, reserves and surplus, then total borrowings, total revenue, total borrowings, banks or financial institution. Let me give you some numbers. I want some answers. Okay. Now, imagine paid up share capital, reserves and surplus total is 90 lakhs. Total borrowings is 90 lakhs. Total revenue is 9 crores. Tell me, is CARO applicable according to these 3 numbers? Is CARO applicable? Look at these 3 numbers and give me the answer. 90 lakhs is the paid up share capital, reserves and surplus. Total borrowings is from banks, financial institution is 90 lakhs. Total revenue is 9 crores. Is CARO applicable? Tell me, is CARO applicable? Answer is no. Why? Because no conditions are satisfied. No, all the three conditions are satisfied. Sorry, all the 3 conditions are satisfied. Everything is less than the limit that is mentioned. Clear? Now, second situation. Second situation, paid up share capital, reserves and surplus. Imagine it is 90 lakhs. Total borrowings, banks or financial institution is 90 lakhs. And total revenue is 11 crore. Is 11 crore. Tell me, is CARO applicable to this private company which is not a subsidiary and holding of a public company? 90 lakhs, 90 lakhs, 11 crores. Is CARO applicable? Is CARO applicable? Answer is, come on. Answer is yes. Why CARO is applicable? Now, first condition satisfied? Yes. Second condition satisfied? Yes. What about the third condition? Third condition is not satisfied because total revenue that is shown is how much? 11 crores. Plus total revenue is 11 crores. It should not exceed how many crores? 10 crores. That is why here you can see total revenue being 11 crores. CARO will be applicable to this private company which is not a subsidiary or holding of a which company? Of a public company. Fine. Next. Next. Now, paid up share capital, reserves and surplus. Imagine it is 2 crores. 2 crores. Now, total borrowings. Now, the moment I said 2 crores is paid up share capital, reserves and surplus, I don't think you have to wait for me to give the other numbers. Why? Because the moment paid up share capital and reserve surplus is 2 crores, it has exceeded 1 crore. So the first condition itself is not satisfied. Therefore, CARO will be what? Applicable. Are you getting my points? What are you? Some people are still thinking what is happening here. See, if all the three conditions are satisfied, CARO is not applicable. Even one condition not satisfied, CARO is applicable. So first condition itself not satisfied. Why? Because paid up share capital reserves and surplus should be how much? Should be less than or equal to 1 crore. Here paid up share capital and reserves and surplus is how much? 2 crores. The moment that it is 2 crores, first condition itself not satisfied. Therefore, CARO is applicable to this private company, which is subsidiary or holding of a public company. Are you getting my point? Did you understand? Okay, this is how you have to look at the applicability. Even one condition not satisfied, CARO is applicable. Three conditions satisfied, CARO is not applicable. CARO is not applicable to a private company which is not a subsidiary or holding of a public company. Now, very few small discussions I want to do, which may not be discussed much in your textbook, because your textbook, whatever it is, just deals with the applicability, not more than that. But I want to deal with few discussions. Now, when we say paid up share capital, is it equity share capital or preference share capital or both? When do you say paid up share capital, is it equity, preference or both? Please understand, it is both equity share capital as well as preference share capital. Now, when we say reserves, what comes under reserves? Do you think capital redemption reserve would come? Do you think debenture redemption reserve would come? Do you think revaluation reserves would come? Do you think securities premium account would come? Please understand, when we say reserves, it is all reserves. Please understand, it is all reserves. Don't even see what kind of reserve it is. Even revaluation reserve you include in the calculation. When we say reserves, it is all reserves. Do you understand? All the reserves will be included. Capital redemption reserve? Yes. Revenue reserves? Yes. Then revaluation reserve? Yes. Blah blah reserve? Yes. What is blah blah reserve? It is not a reserve, but still what you have to understand, any reserve, securities premium, all reserves will be included when you calculate reserves and surplus. Do you understand? Now listen to me carefully. What about total borrowings when we take? If the company has borrowed, okay, if the company has borrowed 2 crores from the directors, if the company has borrowed 2 crores from the directors, will you include in the calculation of total borrowings? If the company has borrowed 2 crores from the directors of the company, will it be included in the total borrowings? Hello? Will it be included? Hello? No. Why? Only total borrowings from where? Banks or financial institutions. Directors, it will not come. If company has borrowed from subsidiary company, will it come? No. Don't take all the borrowings. Only borrowings from banks or financial institutions should be taken. Are you getting my point? Now, if the company borrows 1 crore from a bank, 1 crore from another bank. So 1 crore from a bank, 1 crore from another bank. Will CARO be applicable? If they take 1 crore loan from a bank, 1 crore loan from another bank, will it be applicable? Come on. Yes, it is a total borrowings. You have to take the total borrowings from banks or financial institutions. It not separately. So total borrowings here becomes 2 crores. Are you getting my point? Next. Now, if the company takes a loan of 3 crores, okay, then repays the loan on the date of balance sheet. The company takes a loan of 3 crores during the financial year, repays the loan on the date of balance sheet. Will CARO be applicable for that company? Private company, which is not a subsidiary or holding of a public company. 3 crore loan has been taken during the year. At the end of the year, the loan has been repaid. So in the balance sheet, there is no loan from the bank. 3 crore loan from the bank. It has been fully repaid. Will CARO be applicable? Hello, will CARO be applicable? Yes. Why? Total borrowings should not exceed 1 crore at any point of time during the financial year. At any point of time during the financial year. Do you understand? At any point of time during the financial year. That is very, very important. In the question, they will say loan has been repaid. Doesn't matter. Any point of time during the financial year, the limit is crossed. CARO is applicable to this private company which is not a subsidiary or holding of a public company. Next question. Now, will bank overdraft? Imagine I have taken a loan of 90 lakhs. Okay, I have a bank overdraft of 10 lakhs. Credit card of 1 lakh. Will CARO be applicable? loan 90 lakhs, bank overdraft 10 lakhs, credit card 1 lakh outstanding. Will CARO be applicable? 1 lakh rupee outstanding, credit card. Will CARO be applicable? Yes or no? Yes or no? Yes or no? Answer is yes. Bank overdraft, cash credit, credit card operations, everything will come under borrowings. Even credit card will come under borrowings. Are you getting my point? Okay, it is total borrowings from only bank or financial institution. That you should take care. Only from bank or financial institutions. Okay, do you understand? It is very, very important. Now, next, as far as total revenue is concerned, revenue from goods, revenue from services, everything will be included. Whenever there is a trade discount, we will reduce it. That will be the net sales. Okay, so whenever trade discount is there, we will reduce it. Because trade discount will be always reduced from the sales. So you have to be careful. Sales return. When there is a sales return, you have to reduce from the revenue. Whatever sales return from whichever year, please reduce from the total revenue. Do you understand? Now, what you have to be careful is, if they have given you sales as per the financial statement 12 crores and then they are saying trade discount 2 crores. Now, if the sales is already given from the P&L account, it would have been after it has trade discount have been reduced. So you don't have to reduce it again. Hello. If they have already given you sales as per schedule 3, still they give you trade discount, you need not minus it. Why? If they say sales including trade discount means what? Already trade discount has been reduced. You don't have to reduce it again. But if they have not taken trade discount in sales and they have given you trade discount separately, then you will have to reduce it. Hello. Do you understand? So trade discount, you have to be very careful. You have to check whether already trade discount is deducted or not. Sales return, anyhow you minus from the sales. Whichever year sales they say, don't bother. If it is sales return, you just reduce it from what? From the total revenue. Do you understand? These are some of the points I want to tell you, because in case MCQs come, something comes, you will have to know how to calculate it. And one thing, let me ask you a question. Imagine a question comes like this. Okay, paid up share capital 90 lakhs, reserves 5 lakhs, then total borrowings, banks 50 lakhs, then from financial institution, what do you say, 40 lakhs, total revenue 9 crores. Tell me, is CARO applicable? CARO 90 lakhs, 5 lakhs, 50 lakhs, 40 lakhs, total revenue 9 crores. Is CARO applicable to this company? Is CARO applicable to this company? Paid up share capital 90 lakhs, reserves and surplus 5 lakhs, ABC Limited, then total borrowings, banks, financial institution 50 lakhs, 40 lakhs, total revenue 9 crores. Is CARO applicable? CARO applicable? Now, this is where you should be careful. You must be saying not applicable and you're enjoying. Hello, 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 hello. ABC Limited. It is public company. No need to look at all these points. Moment it is a public company, CARO is applicable. Do you understand? These conditions you will check only if it is a private company which is not a subsidiary or holding of a public company. See, what you have to understand is, once you learn these three conditions, no, students will feel CARO applicability is always these three conditions. No. CARO applicability is these three conditions only for private company which is not a subsidiary or holding of a public company. Do you understand? If the question says public company, then don't look at any conditions. Directly say CARO is applicable. This is one genuine mistake students will do. Moment the company is public company, I have seen students writing, first we have to check whether CARO is applicable. Why? ABC Limited CARO is applicable. Why do you have to check the conditions? Do you understand what I am saying? It's a very, very important thing that you have to take care. Okay, so applicability of CARO is very, very important. Please go through the applicability of CARO as far as for whom it is not applicable, all these points. Okay, very important. Pause the video, learn the applicability, make the notes that you want to make, and then we'll move forward regarding the clauses. Okay. So students, having gone through the applicability of CARO 2016, we have learned about for whom CARO is applicable. for which companies CARO is not applicable, those things was focused on the part 1 of our discussion. Now going to the main discussion of the clauses. So totally there are 16 points that we have to learn in CARO, 16 points. Okay, so how do we learn these 16 points are very important. Now to learn these 16 points, I'll tell you a very easy method. Okay, you can copy this down in your notebook. Okay, when we learn. So this will be the pattern of learning. So I'll show you how the pattern is we are going to learn. So once we learn from these points, then we'll go to the explanations of these points. So the first reporting requirement in CARO 2016 is for fixed assets. Is for what? Fixed assets. There are 3 reporting under fixed assets. 1. You have to comment whether fixed assets, whether proper records are maintained by the company for those fixed assets. Second, you have to comment on the physical verification conducted on the fixed assets. Third, you have to comment on whether the title deeds of the immovable properties are held in the name of the company, if not the details. So basically with respect to fixed assets, there are 3 reporting requirements. 1, whether proper records are maintained. 2, physical verification. 3, title deeds. So let's try to start to play a game. Okay. So when I say 1, what you will say? Fixed assets. What is 1, 1? Proper records. 1, 2, physical verification. 1, 3, title deeds. So let's finish learning this. Come on. 1, fixed assets. 1, 1, proper records. 1, 2, physical verification. 1, 3, title deeds. Come on. 1, fixed assets. 1, 1, proper records. 1, 2, physical verification. 1, 3, title deeds. See how it is given in the sentences. So the first reporting requirement is whether company is maintaining proper records with respect to what? Fixed assets. Whether these fixed assets are physically verified by the management at reasonable intervals, and any material discrepancies were noticed during the verification, whether it has been properly dealt. Third, title deed of immovable properties, whether it is held in the name of the company, and provide the details. So you can see once we learn the points, it's very easy for you to read the sentences. Yes or no? Do you get the game? First we'll learn the points, then we'll go to the sentences and see how the sentence is drafted. You just have to know how it is drafted. The main points is anyways learned. Come on everybody. What is point number 1? Fixed assets. 1, 1, proper records. 1, 2, physical verification. 1, 3, title deeds. Repeat again. What is 1? Fixed assets. 1, 1, proper records. 1, 2, physical verification. 1, 3, title deeds. Now let's go to the second point. Now what is the second point? Second point is, second reporting requirement is inventories. 2 is what? Inventories. What is 2, 1? Physical verification. So auditor has to comment whether the inventories physical verification is conducted at reasonable intervals and material discrepancies have to be reported. Are you getting my points? So what is 2? Inventories. 2, 1, physical verification. What is 2? Inventories. 2, 1, physical verification. What is 2? Inventories. 2, 1, physical verification. Let's see what is given in the text. Whether physical verification of the inventory has been conducted at reasonable intervals by the management, and whether any material discrepancies have been noticed, whether they have been properly dealt in the books of accounts. That's it. You don't have to by heart the same sentence. You just need the points. Are you getting my points? So come on everybody. What was 1? Fixed assets. 2, inventories. Good. 1, 1, proper records. 1, 2, physical verification. 1, 3, title deeds. Okay. What is 2, 1? Physical verification. Good. What is 1, 3? Now the game will get better. What is 1, 3? Title deeds. Good. What is 2, 1? Physical verification. What is 1, 1? Proper records. What is 1? Fixed assets. What is 2? Inventories. So what is 1? Fixed asset. What is 2? Inventories. Now let's go to the third reporting requirement. Third reporting requirement. What is the third reporting requirement? The third reporting requirement is respect to loan to section 189 parties. As you know, 199 is the register maintained under the Companies Act where you are having transaction with related parties under section 188 etc. So 189 register gives you the details of the transactions with related parties. So if the company has given loan to the parties mentioned under section 189, there are three reporting requirements. What is 3.1? Terms and conditions. Auditor has to report whether the terms and conditions on which this loan has been given, whether it is prejudicial to the interest of the company. What is 3.2? Schedule of repayment. Whether they are properly repaying the principal and interest. Third, overdue more than 90 days. What is 3.3? Overdue more than 90 days. That is, if the amount is remaining overdue for more than 90 days, whether reasonable steps have been taken to get the amount. Okay, so three reporting requirements when you are giving loan to section 189 parties. Come on everybody, what is 3? Loan to section 189 parties. What is 3.1? Terms and conditions. 3.2? Schedule of repayment. 3.3? Overdue more than 90 days. Come on, come on. What is 3? What is 3? Loan to section 189 parties. 3.1? Come on, 3.1? Terms and conditions. 3.2? Schedule of repayment. 3.3? Overdue more than 90 days. Let's see what is given in the textbook regarding the sentences. Third reporting is whether company has granted any loans, secured or unsecured, to the company's firms, limited liability partnership or other parties covered in the register maintained under section 189 of the Companies Act. If so, whether the terms and conditions of the loans are not prejudicial to the company's interest. Then whether schedule of repayment has been stipulated and repayments are regular. Then if it is overdue for more, if the amount is overdue for more than 90 days, whether reasonable steps have been taken by the company for recovery of principal and interest. As you know, these are related parties. It is very important for the users to know whether these loans given are for proper purpose and whether the repayment is received. Yes or no, to make sure that fund is not diverted through these parties. Okay. So what is 3? Loan to section 189 parties. What is 3.1? Terms and conditions. 3.2? Schedule of repayment. 3.3? Overdue more than 90 days. Come on. What is 1? Fixed asset. 2? On top of your voice. Come on. Inventories. 3? Loan to section 189 parties. Good. What is 1, 2? Now the game will get better. What is 1, 2? Physical verification. Good. What is 1, 3? Title deeds. Okay. What is 3? Loan to section 189 parties. What is 3.1? 3.1? Terms and conditions. 3.2? Schedule of repayments. 3.3? Overdue more than 90 days. Okay. What is 2? What is 2? Inventories. 2.1? Fiscal verification. What is 1.2? 1.2? Fiscal verification. What is 2.1? Fiscal verification. Magic, no? 1.2? Fiscal verification. 2.1? Fiscal verification. What is 1? Fixed asset. 2? Inventories. 3? Loan to section 189 parties. Now let's go to the fourth one. Fourth one. What is 4? What is 4? See, 4 means there are 4 things. Loans, investments, guarantees, securities. Come on, tell me. Loans, investments, guarantees, securities. Come on. Loans, investments, guarantees, securities. Come on. 4 means loans, investments, guarantees, securities. 4. Loans, investments, guarantees, securities. Okay, that is 4. Loans, investments, guarantees, securities. What do you report in section in point number 4? 4.1 is section 185 and 186. You should know there are 2 sections under Companies Act which tells you the procedure when you are giving loans, investments, guarantees, securities. There's a limit above which you cannot give loans. You have to pass some resolution if you are giving loans above investing above the prescribed limit. That is section 185 and 186. The auditor has to just make sure that whenever a loan, investment, guarantee or security is made, it is within the compliance of section 185 and 186. Come on, come on. What is 4? Loans, investments, guarantees, securities. What is 4.1? Section 185 and 186. Section 185 and 186. Let's see what is given in the textbook. It says, in respect of loans, investments, guarantees, securities, whether provisions of section 185 and 186 have been complied with. If not, provide the details. Do you get my points? That is 4. Come on everyone. What is 1? Fixed asset. Good. What is 3? Loan to section 189 parties. Good. What is 4? Loans, investments, guarantees, securities. Good. What is 1.1? Proper records. What is 1.3? 1.3? Title deeds. Good. What is 2.1? 2-1, fiscal verification. Good. What is 3-3? 3-3. It is overdue more than 90 days. Good. What is 4-1? Section 185 and 186. Let's try to see. What is 1? Fixed assets. 2. Inventories. 3. Loan to section 189 parties. And 4. What is 4? 4 is loans, investments, guarantees, securities. So these were the 4 points. So do one thing. Just read through the sentences. Read through the sentences so that you will get an idea. 1, 2, 3 and 4. Pause the video. Read through all the 4 points quickly. Take 2 minutes and finish reading quick. So I hope that you have learned 1, 2, 3 and 4 in the break that we took. I think you were completely sitting and studying those 4 points. I think that's the biggest comedy that you will ever hear. I don't know how many of you have studied. But anyways, let's move forward to the 5th one. Okay, so the 5th one is what we are going to deal with next. The 5th one. Yeah. So 5th one is regarding deposits. Okay, 5th one is deposits. So if the company is accepting deposits, what are the reporting requirements? 1 is RBI. The auditor has to make sure that the company has complied with the directives issued by RBI in case of acceptance of deposits. 2 is whether they have complied with the provisions of the Companies Act 2013. 3, whether they have complied with the orders passed by the tribunal, passed by the court, etc. with respect to deposits. In case they have made some default, the orders might be passed by the court, tribunal, etc. And 4, whatever non-compliance happens of these orders, these directives, Companies Act, you please give the details. So basically, what is 5? 5 is deposits, focusing on deposits. 5 is deposits. 5-1 RBI, 5-2 Companies Act, 5-3 orders, 5-4 details of non-compliance. So what is 5? Deposits. 5-1 RBI, 5-2 Companies Act, 5-3 orders, 5-4 details of non-compliance. Let's see what is given in the textbook. In case the company has accepted deposits, whether directives issued by RBI, are complied, whether they have complied with Companies Act 2013, then whether they have complied with the orders passed by Company Law Board, National Company Law Tribunal, Reserve Bank of India, any court or tribunal. Okay, these things you have to report, and whether there has been any contraventions, that is non-compliance. So you can see this paragraph focusing on deposits, 4 points. 5-1 RBI, 5-2 Companies Act, 5-3 orders, 5-4 details of any contraventions or non-compliance. Okay, so come on, tell me, what is 5? What is 5? Deposits. 5-1 RBI, 5-2 Companies Act, 5-3 orders, and 5-4 details of non-compliance or contravention. Now tell me, what is 1? Fixed assets. 2. Inventories. 3. Loan to section 189 parties. 4. Loans, investments, guarantees, securities. 5. Deposits. What is 1-1? 1-1. Forgot, no? 1-1 proper records. 1-2 physical verification. 1-3 title deeds. What is 2-1? Fiscal verification. What is 3-1? 3-1 terms and conditions. 3-2 schedule of repayment. 3-3 overdue more than 90 days. Then what is 4-1? Section 185 and 186. What is 5-1? RBI. 5-2 Companies Act. 5-3 orders. 5-4 details of non-compliance or contraventions. Okay, once more, randomly can I ask, what is 3-1? Correct, 3-1 is terms and conditions. What is 5-2? Companies Act. What is 4-1? Section 185 and 186. What is 1-3? Title deeds. Good. So we learned 1, 2, 3 and 4 and 5. Let's go to 6. What is the reporting requirement number 6? Reporting requirement number 6 is with respect to cost records. If under section 148 of the Companies Act, The government requires the companies to maintain cost records. The auditor has to comment 6.1 whether those cost records are made and maintained. What is 6.1? Made and maintained. What is 6.1? Made and maintained. Tell how the way I am telling you, okay? What is 6.1? Made and maintained. 6.1? Made and maintained. 6.1? Made and maintained. Why I am giving stretch to made and maintained? Because you are not commenting whether the cost records are true and fair. Because you are no one to comment on true and fair view. You are not a cost auditor. You are just commenting whether it is made and maintained. 6.1 is made and maintained. 6.1 is made and maintained. You understand? So that is what you are commenting on, whether it is made and maintained. See how it is given in the textbook. Whether maintenance of cost records has been specified by the central government under section 148 subsection 1 of the Companies Act, and whether such accounts and records have been so made and maintained. Made and maintained. Okay. So that is the focus of these points, made and maintained. Okay. So what is 6? Maintenance of cost records. 6.1 made and maintained. Tell me. Come on, let's discuss all the points now. What is 1? Fixed assets. 2. Inventories. 3. Loan to section 189 parties. 4. Loans, investments, guarantees, securities. 5. Deposits. 6. Cost records. Okay, can I ask you randomly? What is 1.3? Good, title deeds. What is 5.2? Companies Act. Good. What is 6.1? Made and maintained. That way you should say. Okay. What is 6.1? Made and maintained. Okay. What is 3.1? Terms and conditions. Good. What is 5.3? Orders. Good. What is 1.1? Proper records. Good. So 1. Fixed assets. 2. Inventories. 3. Loan to section 189 parties. 4. Loans, investments, guarantees, securities. 5. Deposits. 6. Cost records. Now let's go to the 7th point. What is the 7th reporting requirement? 7th reporting requirement is with statutory dues. Statutory payments like tax, duties, cess, ESI, Provident Fund, statutory payments. So here the reporting is on statutory payments. If it is remaining due, that means you have not paid it on the due date, so it becomes a statutory due. So you'll have to report. Reporting is based on whether it is undisputed or disputed. What is the reason for not paying the statutory payment? Now listen to me carefully. First, let us take only tax. Okay, let's take only taxes. So if the statutory payment is a tax and tax has not been paid, reasons could be 2. 1. No dispute. You have just not paid. Why? No money. Did not know that you had to pay. Forgot to pay. That is undisputed. What do you mean by disputed reasons? There is some dispute with the department due to which you have not paid till the settlement of the dispute. So taxes may not be paid either because they have not just paid it for some reason, or maybe because there is a dispute. So depending upon it is undisputed or disputed, reporting will change. As far as other statutory payments are concerned, other statutory payments means other than taxes, you will report only under undisputed. You will not report it under disputed. There you cannot have 2 categories. Only 1 category, undisputed. So what you have to report? If the statutory payment has not been paid in the due date, it becomes a statutory due and there is no dispute. You will have to report if it is remaining unpaid for more than 6 months from the date of the financial statements. More than 6 months from the date they became payable. More than 6 months, from the date they became payable. Okay, if it is undisputed. If the statutory payment of tax has not been paid due to a dispute, then you have to give the details of the dispute. I think it's better to read, then we'll understand better. See, 7, we have to comment whether company is regular in depositing undisputed statutory dues, including Provident Fund, ESI, income tax, sales tax, GST, service tax, blah, 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 blah. If not, the extent of arrears outstanding dues as on the last date of the financial year concerned for more than 6 months from the date they became payable. If it is remaining unpaid for more than 6 months from the date they became payable. Whereof income tax, sales tax, service tax, customs duty, GST has not been deposited because of any dispute, then you have to give the details of what is the amount of dispute, where the forum which is being disputed is being discussed, the concerned department, the forum, that is whether it is tribunal or court, etc. So you can see here they have mentioned only about taxes. They have not mentioned about ESI Provident Fund. ESI Provident Fund will always come under undisputed. It will not come under disputed. Taxes may come under undisputed or disputed. Are you getting my point? Hello, are you getting my point? Here what you have to take care is, if the tax has not been paid, if the tax has not been paid and it is relating to some dispute. See, dispute means a proper dispute should go in the court. It is not that a show cause notice is given and you have not replied does not mean there is a dispute. Just because a letter has been given and you have not responded, it is not a dispute. Dispute comes when it is properly discussed in a forum, that is in a court, tribunal, then only we say it is a dispute. And the dispute is between the company and the department. If the company's manager and company's accounts person is under dispute on how much tax needs to be paid, it is not disputed. All these have come for exam. Dispute means department and the company. Do you understand? No? Please keep this in mind. Okay, so what is 7? What is 7? Statutory dues. What is 7.1? What is 7.1? Undisputed. What is 7.2? Disputed. What is 7.1? Undisputed. What is 7.2? Disputed. Tell me. Let's discuss what is 1? Fixed assets. 2. Inventories. 3. Loan to section 189 parties. 4. Loans, investments, guarantees, securities. 5. Deposits. 6. Cost records. 7. Statutory dues. What is 1.3? Title deeds. 3.1. Terms and conditions. 5.1. Come on. RBI. Good. 7.1. Undisputed. 7.2. Disputed. 2.1. Fiscal verification. 1.2. Fiscal verification. 5.3. Orders. 6.1. Made and maintained. 6.1 is made and maintained. 7. Statutory dues. Good. Now let's go to the 8th point. What is the 8th reporting requirement? The 8th reporting requirement is default in repayment. That means if you have taken money from bank, financial institution, debenture holders, government, and you have not repaid them back, that is default in repayment. In that case, you have to report 8.1 is period and amount. What is the period of default? What is the amount? Default in repayment. What is 8? Default in repayment. To whom? Bank, financial institution, debenture holders, government. Default in repayment. So you have taken some money, you have not repaid. So you have to mention the period and amount. 8.1 is period and amount. Let's see what is given in the text. See, whether company has defaulted in repayment of loans, borrowings to a financial institution, bank, government due to debenture holders. If yes, period of and the amount of default should be reported. Okay, it's very, very important. The default in repayment. What is 8? Default in repayment. What is 8? Default in repayment. From whom? Bank, financial institution, debenture holders, government. And 8.1 is what? 8.1 is period and amount. Okay, so tell me, what is 1? Fixed assets. 2. Inventories. 3. Loan to section 189 parties. 4. Loans, investments, guarantees, securities. 5. Deposits. 6. Cost records. 7. Statutory dues. 8. Default in repayment. What is 5.1? Come on, 5.1. RBI. 6.1. Made and maintained. 1.3. Title deeds. 8.1. Yes, right now what we discuss. 8.1. Period and amount. Some people are like, what we discuss now? Yes, period and amount. Then 6.1. Made and maintained. 2.1. Fiscal verification. 5.3. Orders. Good. 6.1. Made and maintained. Then 7. Statutory dues. Okay. So we discuss 1 to 8 now. 1 to 8 we have discussed. Yes. Pause. Listen to it. Not listen, sorry. Read through 5, 6, 7 and 8. Read through 5, 6, 7 and 8. Okay. These 4 you read. Good. So we have done 8 points. Yes, 1 to 8 is over. Next, let's go to the 9th point. So what is the 9th point? 9th is regarding, what is 9? IPO, FPO term loans. 9. IPO, FPO term loans. 9. IPO, FPO term loans. What is IPO? IPO, initial public offer. What is FPO? Further public offer and term loans. So 9 is IPPO FPO term loans. 9 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 IPPO FPO term loans. IPPO is initial public offer, FPO further public offer, and term loans. So if the company has gone for an initial public offer or a further public offer or any term loans, then what are the things that has to be reported by the auditor? 1. Whether money received through this process has been applied for the purpose for which it is taken. Second, whether there was any delays or default, whether there is any delays or default in the application. And third, if they have not been applied within the balance sheet date, whether subsequently they were applied for the purpose, subsequent rectification. For example, I took a term loan for purchase of machinery, but on 31st March, by 31st March, I could not purchase the machinery. I purchased it after 31st March. Then I will have to say that loan was taken, by 31st March it was not applied, but subsequently the machinery was purchased. Clear? So what is 9? IPPO FPO term loans. 9 IPPO FPO term loans. 9 IPPO FPO term loans. 9 IPPO FPO term loans. 9.1 applied for the purpose. 9.2 delays or default. 9.3 subsequent rectification. Let's see what is given in the textbook. Whether money raised by way of initial public offer or further public offer and term loans were applied for the purpose for which those are raised. If not, details with the delays or default and subsequent rectification should be reported. That is point number 9. So what is 9? IPPO FPO term loans. 9 IPPO FPO term loans. Now tell me, what is 1? Fixed assets. 2 inventories. 3 loans to section 189 parties. 4 loans, investments, guarantees, securities. 5 deposits. 6 cost records. 7 statutory dues. 8 default in repayment. 9 IPPO FPO term loans. Okay, then what is 5.1? RBI. Good. What is 9.1? Applied for the purpose. Good. What is 1.2? Fiscal verification. Good. What is 5.3? Orders. Correct. What is 6.1? Made and maintained. What is 9? IPPO FPO term loans. Next we'll go to the 10th one. So what is 10? 10 is a very important clause, deals with fraud. What is 10? Fraud. 10 fraud. 10 fraud. 10 fraud. 10 fraud. 10 fraud. 10 fraud. So what do you have to report if there is any fraud on the company or fraud by the company, officers or employees? In that case, you have to report the nature and amount of fraud. What is 10.1? Nature and amount of fraud. 10.1 is nature and amount of fraud. So what is 10? Fraud. 10.1 is nature and amount. Let's see what is given here. Whether any fraud by the company or any fraud on the company by its officers, employees have been noticed and reported during the year. If yes, the nature and amount involved is to be indicated. Nature and amount involved is to be indicated. Okay. So that is 10. Fraud. 10. Fraud. Okay. So tell me, what is 1? Fixed assets. 2. Inventories. 3. Loan to section 189 parties. 4. Loans, investments, guarantees, securities. 5. Deposits. 6. Cost records. 7. Statutory dues. 8. Default in repayment. 9. IPPO FPO term loans. 10. Fraud. Ready? Jumbled way. We'll just discuss once. Tell me what is 9.1. Applied for the purpose. Good. 10.1. Nature and amount. Good. 2.1. Fiscal verification. Superb. 5.2. Companies Act. Superb. 1.3. Title deeds. Title deeds. Correct. Good. Title deeds. Then 6.1. Made and maintained. Good. 10. Fraud. Good. 2.1. 2.1. Fiscal verification. Correct. So we have learned 1 to 10. Now let's go to the 11th point. Let's go to the 11th point. Now what is the 11th reporting requirement? Now till 10 actually there's a nice combination. Can you see point number 2? Only 1 point. Point number 4, 1. 6, 1. 8, 1. 10, 1. You saw the magic? Can you see the magic? 2-1, 4-1, 6-1, 8-1, 10-1. You don't understand the magic? These are called as even numbers. Understand? So till point 10, even numbers only 1 point is there. 2-1, 4-1, 6-1, 8-1, 10-1. Do you understand? After 10, this magic does not work. That is why I told you now. Okay. Now, come to the 11th reporting. What is the 11th reporting requirement regarding managerial remuneration? That means if managerial remuneration paid, three things have to be reported. 11.1 is section 197 and schedule 5. Whenever managerial remuneration is paid, it should be paid according to the section 197 of the Companies Act along with the schedule 5 requirements regarding the that is given for so much percentage of profit, so much managerial remuneration. You would have learned this in your final accounts of companies. So this is managerial remuneration. Then what is the amount involved if the excess amount has been paid? And what are the steps taken for getting the refund of the excess remuneration being paid? Let's see what is there in the textbook. It says whether managerial remuneration has been paid or provided in accordance with the requisite approvals mandated by section 197 and schedule 5. If not, what is the amount involved and the steps taken by the company for refund of the same? Steps taken by the company for refund of the same. So this is called as, this is the point, managerial remuneration, whether it has been paid or provided. So 11.1 is 197 and schedule 5. 11.2 is what is the amount involved. Then 11.3 is what is the steps taken for refund. Okay, so what is 11? Managerial remuneration. 11.1 section 197 schedule 5. 11.2 amount involved. 11.3 refund. Tell me what is 11.1? What is 11? Managerial remuneration. 11.1 197 and schedule 5. 11.2 amount involved. 11.3 refund. Okay, see till 10 you can learn with our method. From 11 you try to learn it some other day, because together if you learn, first 10 also will get jumbled. This is what with respect to 11 is all about. Now let's go to 12. The 12th point is with respect to what? Nidhi company. 12th point is with respect to Nidhi company. There are two reporting requirements. These chit funds, etc., these Nidhi companies. Here you have to report whether net owned funds to deposits are maintained in the ratio 1:20. That means Nidhi company can accept 20 times deposits of the net owned funds. 20 times deposits of the net owned funds. So this is the ratio which needs to be maintained. 1:20. Net owned funds to deposit should be in the ratio 1:20. You have to report. Second, whether they have kept 10% unencumbered term deposits. Whether there are 10% unencumbered term deposits. What is unencumbered term deposits? That means the term deposits which are kept without any encumbrance. Encumbrance means charge or security. It is kept open. It can be taken away anytime. So 10% of the term of deposit should be unencumbered. It could be withdrawn anytime to pay the liabilities. So when you are auditing Nidhi companies, you have to report two things on the CARO. One is whether Nidhi company is maintaining the net owned funds to deposit in the ratio 1:20, and 12.2 is 10% unencumbered term deposits. Let's see what is given in the textbook. Whether Nidhi company has complied with the net owned funds to deposit in the ratio 1:20 to meet out the liability, and whether Nidhi company is maintaining 10% unencumbered term deposits to meet out the liability. So that to meet out the liability, this is the ratio of deposits that needs to be maintained to net owned funds, and you should keep the term deposits 10% at least as unencumbered. This is 12. 12 is applicable to which company? Nidhi company. 12.1 is net owned funds to deposit in the ratio 1:20. 12.2 is 10% unencumbered term deposits. Good. What was 11? Managerial remuneration. 11.1 section 197 and schedule 5. 11.2 amount involved. 11.3 refund. Steps taken for getting refund. Good. What is 12? Nidhi company. 12.1 net owned funds to deposit in the ratio 1:20. 12.2 10% unencumbered term deposits. Okay. Now let's go to the 13th one. I'm not playing the game because I told you play it some other day, because every 16 together if you do, you will find it difficult. Till 10 it is perfect now. Rest 16 you can just keep on repeating some other day. Okay. Now 13 is for with respect to what? Related parties. Transactions with related parties to reporting. 1. Whether they have complied with section 177 and section 188. What is 177? The audit committee. the section with respect to audit committee. So whenever related party transactions are being entered into, the approval of audit committee is required. And 188 is the section with respect to related parties under Companies Act, which needs to be complied. The auditor has to comment whether they have complied with section 177 and 188 with transaction with respect to related parties. And 13.2 is whether the disclosure is done as per the accounting standards in the financial statements. So these are the two reporting requirements of related parties. So what is 13? Related parties. 13.1, section 177 and 188. 13.2, accounting standards. Let's see what is given in the textbook. In the textbook, it says whether all the transactions with related parties are in compliance with section 177 and 188. We have to report. And whether the details have been disclosed as required by the applicable accounting standards. So two things. One, you are focusing, 13 is with respect to related parties, two reporting requirements. 13.1, whether they have complied with section 177 and 188. 13.2, whether they have complied with the applicable accounting standards. That is 13. What was 11? Managerial remuneration. 12, Nidhi company. 13, related parties. 11.1, section 197 and schedule 5. Level 2, so 11.2, amount involved. 11.3, refunds. Okay, then 12.1, net own funds to deposit in the ratio 1:20. 12.2, 10% unencumbered term deposits. Clear. Then 13, related parties. 13.1, section 177 and section 188. And 13.2, accounting standard. Disclosure as per the accounting standards. Okay. Just go through till 13 points. There's whatever we have learnt regarding 9, 10, 11, 12 and 13. Go through these points quickly. As we always do. Just go through quickly. Read it. Yes, so we have learned totally 13 points. Now going to the 14th one. Okay, going to the 14th one. What is the 14th point? The 14 points deals with private placement or preferential allotment. Private placement or preferential allotment. Private placement or preferential allotment. That means when the company goes for a private placement or a preferential allotment, there are few things which needs to be reported. One, whether it is as per section 42 of the Companies Act. Whether it is as per section 42 of the Companies Act. Then whether the money that has been obtained through this private placement or preferential allotment, whether it has been used for the purpose for which it is raised. Third, if there is a non-compliance, we have to report the non-compliance. So as far as 14th point reporting point is concerned, if the company goes for a private placement or preferential allotment, three things have to be reported. One, whether they have complied with section 42 of the Companies Act. Second, whether it has been used for the purpose for which it is raised. Third, whether there has been any non-compliance of the, what is the non-compliance, the details of non-compliance. Okay. So that is 14. So let's read what is given in the textbook with respect to 14. Whether company has made any preferential allotment or private placement of shares or fully partly convertible debentures during the year. If so, whether the requirement of section 42 has been complied, amount raised have been used for the purpose for which the funds have been raised. If not, provide the details of amount involved for the non-compliance. So basically it is regarding the private placement or preferential allotment. Tell me my students, what was 11? Managerial remuneration. What was 12? What was 12? Come on, Nidhi company. What was 13? Related parties. What is 14? Private placement or preferential allotment. What was 11.1? Section 197 and schedule 5. 11.2, amount involved. 11.3, come on, 11.3, amount involved. What is 11.3? 11.3, refunds. Correct. What is 12.1? Net own funds to deposit should be in the ratio 1:20. What is 12.2? 10% unencumbered term deposits. What is 13? Related parties. 13.1, section 177 and section 188. 13.2, disclosure as per the accounting standards. Then what is 14? Private placement or preferential issue. In that case, we have to report three things. What is 14.1? Section 42. 14.2 is used for the purpose. 14.3, details of the non-compliance. We have done 11, 12, 13 and 14. Now going to the 15th one. Now what is the 15th one? 15th one, what does 15th one deal with? The 15th point deals with deals with non-cash transaction with directors and persons connected with him. If the company has entered into any non-cash transaction with directors or persons connected with him, then he has to comply with section 190. Company has to comply with section 192. So 15.1 is whether the company has complied with section 192. So what is 15? Non-cash transaction with directors or persons connected with him. What is 15.1? Section 192. Let's see what is given here in the textbook. Whether the company has entered into any non-cash transaction with directors or persons connected with him. If so, whether the provisions of 192 have been complied with by the company. So it's very simple. What is 15? Non-cash transaction with directors and persons connected with him. 15.1 section 192, whether it has been complied. Now last point comes in section point number 16. What is point number 16? If a company is required to get it registered with RBI under section 45 IA of the Companies Act, then for 16.1 is whether registration has been obtained. Tell me what is 16? If the company requires to get it registered within RBI from section 145 IA of the RBI Act, whether the registration has been obtained, that we have to report. Tell me which companies do you think they are discussing here, which requires to get registered with RBI under section 45 IA of the RBI Act? Hello? Not banking company. Banking company CARO is not applicable only. How can it be banking company? It is non-banking financial companies, NBFCs. NBFCs are registered under section 45 IA of the RBI Act. IA, not bank. It is NBFC. Do you understand? So when we are doing audit of NBFC and NBFC CARO is applicable. When we are reporting, we have to report whether the registration has been obtained. Let's see what is given in the textbook. Whether company is required to be registered under section 45 IA of the RBI Act, whether registration has been obtained. This is the 16th point. Okay, so all the 16 points we have learned very easily. Can we just revise the whole 16 points? What is point number 1? Fixed assets. 2. Inventories. 3. Loan to section 189 parties. 4. Loans, investments, guarantees, securities. 5. Deposits. 6. Cost records. 7. Statutory dues. 8. Default in repayment. 9. IPO, FPO, term loans. 10. Fraud. 11. Managerial remuneration. 12. Nidhi company. 13. Related parties. 14. Loan to, that is private placement or preferential issue. 15. A non-cash transaction with directors. 16. What is 16? Registration with RBI under section 45 IA. All the points in the middle is also there. Please revise this now and then. 16 points. So easily you can learn CARO. It is not difficult. Okay, even if you are studying CARO 2020, there will not be much difference. Only 4 points have been added. The clauses 1 or 2 numbers might change. So don't worry much. But these points are so easy to learn. This way you can learn many topics. Just by learning the main points. Explanations can be easily said in your own words. You don't have to worry. Do you understand? Easy learning of theory is like this. Just learn the points. See, don't write these numbers in the exam. These numbers that I've made 1, 2, 3, 4 are all for what purpose? 1, 1, 1, 2, 1, 3. All these numbers I've done for learning purpose. Don't write in the exam those numbers. The main numbers are correct. 1, 2, 3, 4, 5, 6. Those main numbers are correct. This is for remembrance purpose we have done. Now it is easy. When you see a question, the moment you see fixed asset, you'll be like, oh, this could come in CARO. The moment you see loans given to 189 parties, you're like, CARO could come. So you have an idea now. The moment the question is about fraud, you'll be like, okay, clause 10. It's easy for you to remember. Are you able to understand? So please make sure you're learning this perfectly. Do you understand? All the 16.1, repeat daily. Try to write and see whether you remember the points. And read through the sentences given in the textbook. Okay, it's very easy. Okay, do it well. It's a good topic. Everybody fears CARO. They fear to remember CARO. Now you see how easily you are remembering. I'm sure you would have done at least 10 points is perfect for you. 6 points you might have to go through a little bit. Even the sub points will be there in your mind. So put that confidence and learn. That is how. Make the strength which is others' weaknesses. The CARO and all is very difficult to learn. If you have such techniques, it becomes easy to learn. Okay. Thank you so much. Thank you so much. It was a wonderful CARO session. I enjoyed really well. And I really had fun teaching you CARO. Okay. So I hope you also have the fun learning it. See you soon. Bye.